Hey guys, what's good? Hitori FX here. Welcome to episode 30 of the weekly market outlook with TradeX Prop. Now, in this episode, I'll be covering the DXY, gold, NASDAQ, pound yen, and good old Bitcoin. If you have any other asset classes you'd like me to cover, just leave a comment down below and I'll get to it in the next weekly outlook, or even better, join our free Discord where you can talk to me as well as the TradeX Prop team. Alright, so coming into next week, we are in the final month of 2024, which is crazy. You know, I swore it was just yesterday that we came into this year, and now we're seeing the final 4 weeks of the calendar year. So that's crazy, you know. Generally people would say things like, oh, December is a bad month, markets are consolidating, it's ranging, market conditions are bad, and while that holds some truth to it, just because of general lack of participation by a lot of big players in the holiday season, but it's not an excuse to still, you have to still show up every single day really and try to look for A+ opportunities, or at least opportunities that fit your trading plan, because I know that the general consensus online is that people can't be profitable trading December. Some people even advise people to take the month off, and while that's not a wrong advice, I think it's kind of misleading in the sense that I also know a lot of people that have December as their best month based on their track record, but of course that's up to each individual's own preference. There's completely nothing wrong with taking the month off, and there's also nothing wrong with trading the month of December. Okay, but of course, do prepare yourselves. We can definitely expect just overall lower momentum throughout the board, so let's just keep that in mind when we're navigating the markets. Okay, enough waffle, let's get straight into the outlook. So here we have the DXY on the daily chart, and quite frankly, right now where we currently are is that we have made this large impulse move higher, and then we pull back and higher again, and then now we're pulling back lower. So the fundamentals are pretty much showing that long term we are likely going to still be seeing a strong dollar with Trump in office. We're going to be seeing a lot of confidence in the economy in the US, but there could be a few weeks of short-term bearishness, especially if you look at historical track records. We might see that bearish pullback during the holiday season, because of multitude of factors, but I won't get into that because this week actually we do have quite some news reports, and this month we also have the FOMC Fed funds rate. So, but just coming back into the technicals here, we're currently closing beneath and also rejecting this previous support at 106.136, and if we follow the consensus that we came into something around here and we rejected off of a higher time frame level of the weekly and the daily around here, and this is what caused the market to essentially find this roadblock to continue lower. When you're navigating these levels, these simple price action support and resistance levels, when we're seeing a body closure like this quite healthily beneath the previous bodies right here that formed that support, I would prefer if the market could showcase to me another bearish candle closure to support that we are actually looking at intention to fully break the markets. Because if we get a body close beneath it that's bearish, let me just draw this out right here, and then suddenly the next candle closes bullish like this, that's a fake out. So I would prefer for my breakouts to have another bearish candle closure to support the fact that we are indeed breaking off of this level. And if we break this support, looking left or looking just where we currently are, we do seem to have some resemblance of clean traffic, right? The next support as of now is around 104.364, and if we're following that consensus of a fundamental short-term bearish dollar, right? Bearish dollar in the form of a pullback, we should be eyeing the markets to do something like a corrective move to continue higher, pushing up, because technically, I mean, both technically and fundamentally, I am bullish on the dollar. Okay, so if we look at where we currently are, we could see that we're breaking off of support right here, and we can expect the market to do something like a break and a retest, hopefully down into 104 to potentially look for long opportunities, right? Because looking left from where we currently are, you look left, there is nothing within this price action leg that is showcasing to me that we have an already established obvious support apart from 104.364 or around this price point. This is a potential area, of course, of resistance, breaks become support, but the way I like to draw my own personal levels of support and resistance is I want to wait for the market to showcase to me that we are actually finding support around this area, because if not, we are just trying to pinpoint and predict that we are going to have support right around here, and that doesn't happen all the time. It could come down and find support around here, but we don't know that until it actually happens. Okay, so as of now, my main targets is to look for potential shorting opportunities on the dollar index coming down into 104 from where we currently are, which is around, let's do a rough count, it's around 1,400 ticks. All right, so the key point here is to understand that even though we expect a bearish move downwards, it doesn't mean that we're going to get that full move downwards. Ideally, of course, we would want that, but we won't know until we actually get it, right? So halfway through that range, you can probably start taking profits at potential areas of reactions, or when we're halfway down into that clean traffic range, you should be taking some of your profits off of your main positions right there. Just take some bulk off and then leave the rest to run. Okay, because the most important thing as traders is to pay yourselves, whether it be it in the long term or the short term. You want to just be taking cuts from the markets as you start trading. Obviously, I'm not saying that you should be going break even, closing partials whenever you think you should, but just follow your system. If the risk management system in your trading strategy calls for this kind of manual intervention of going break even, closing partial, stuff like that, then definitely do it. But if it's not in your plan, then don't do it. It's that simple, right? But personally, I do think that based on the books that I've read from traders, on real traders, not those online gurus and stuff like that, but based on real books by real traders that traded the floors, that traded in hedge funds, they try to practice something like taking partial positions, stuff like that, and then moving stops to break even. Some people might clown you for that. That's fine, each to their own. I just personally prefer people to do that if possible, and if their system and statistics allow for it. Okay, but just to recap, still short-term bearish on dollar for now in the form of a pullback. We came off of something at the top right here, and we're breaking this previous low with quite a big intention. So we could be seeing that market do a break and retest, or just continue lower into maybe 105. But ultimately, I would prefer if we reach somewhere around the 104 level to see that move higher. Okay, if we start coming down and then we find some support, maybe not even around 105, we start forming some support, I'd be wary to be taking shorts anymore, and I would probably, if I were in shorts, I would manage my positions by maybe closing some off, moving stocks to break even and stuff like that. Okay, because I am still bullish long term on the dollar. Okay, but bringing next week into light, we do have a week full of interesting news releases. First off, we have PMI. This is all in Malaysian local time, GMT +8, so do adjust that to your own time zone. We have PMI on Monday, JOLTS Tuesday, Wednesday we also have PMI again, but for services, as well as ADP non-farm employment change. Thursday we have unemployment claims, and Friday we have the big bad NFP. Okay, so the framework for most people, some people they don't even trade NFP day. Some people they don't even trade Thursday, which is the day before NFP. But generally, I would like to end my trading week before Thursday, right? So Monday, Tuesday, Wednesday, I'd be looking to trade them, no problem. Thursday, Friday, Thursday's fine, but Friday could be a bit messy, especially during London session, which is my own trading session. I prefer to trade London. That's when I'm available to trade London. Personally, I would stick until the first half of London Q zone on Thursday, and then if I don't get anything set up, I'll probably just stop trading, because Friday London session might be an interesting or a tough time to navigate the markets. Okay, so that is pretty much it for the DXY. Always manage your position, manage your risk, and let's head on to the next pair, which is gold. Not on Oenda, is it? It's on forex.com. All right, so here we have gold on forex.com, and the thing with gold is that as of now, I mean long term, obviously, I'm a perma bull on gold. You know, long term, I think most people would make a lot of money just longing gold and DCAing into their entries and stuff like that, or even just, you know, for your own investments, your own personal investments, not trading, but just buying a bunch of gold ETFs, because I am a long-term perma bull on gold. But short-term, of course, we are seeing this big drop right here towards the end of the year. You know, not because we are just seeing strong data from the US, but also there are a few reasons why I think we're seeing a potential short-term bearish pullback on gold. First is because we've been bullish all year round. If I just zoom out, we've been bullish all year round, just breaking all-time highs. You know, we're breaking them, and we are just creating this large surge in price for gold. And towards the end of the year, we saw this large drop. You know, now some of them were mainly caused. This one was caused by the elections, right? When Trump won, it's a generally bad thing for gold, because now people are going to see strengthening the US economy. They're going to be putting their money into stocks, into the dollar indexes, into treasury bonds, stuff like that. That just shows how much confidence that the people have in not just Trump, but someone of that nature. You know, I think even if Trump didn't win, you know, Kamala would also be a big spender, so that would also in turn, you know, cause a large surge in economic activity for the US. But more so for Trump, it's a bit more crazy. I think the impact was definitely much higher because of the decision that Trump won. I mean, result, not decision, but Trump, you know, won. But basically, I think that this surge lower, or this pullback, it could in turn invite a short-term bearish retracement on gold for a few reasons. The first one is actually because towards the end of the year, we are going to be seeing some, you know, rebalancing or readjustment of flows in the markets, meaning we are going to be correcting some of the profits, and I mean, we are going to be seeing some profit taking in the markets at the end of the year. And also, we are seeing some ceasefire in the tensions surrounding the world, which is a generally good thing. You know, I've always wanted the Middle East to call for a ceasefire from a humanitarian standpoint. I think that's amazing. We are seeing that happen. But what that calls for gold is we're going to be seeing this decrease in demand in investors for gold as a safe haven, because gold is a asset that heavily relies on how people think the world is doing, like based on just geopolitical tension. If it's high, gold is going to be surging up. Like you see for a whole of this year, gold's been rushing up, up, up. Inflation fears, war, threats of war, and all that stuff. And suddenly, end of year, large pullback, profit taking at all-time highs. Trump won, and then now we're seeing a potential ceasefire, and we might see this catapult gold into a short-term bearish move right now. So as of now, technically speaking, where we are at in gold, we just formed a support around 2623. We think, or at least I think, that we are going to be seeing some corrective movement within this almost 9,000 tick range, or around a 900 pip range, for gold to kind of like correct itself within and potentially break towards the downside of 2623. And if we see a breakout, we could see price correct all the way down into 2562 right here for around 600 points. And on a larger scale, I do think price could even come all the way down into this previous area of accumulation right here at around 2526, right? Taking out this low, coming lower into this potential, this previous area of accumulation, to then take some liquidity maybe, or find some support to continue higher, right? So because short term, this is probably a bearish pullback. I'm not expecting a bearish, full-blown bearish move, but just better pricing for us to get longs from. So that's pretty much what I'm expecting for gold for this week. I'm not sure if you'll keep on trading within this range, and if you do, ideally short around 2716, buy around 2623, basically the extremes of the ranges right here. But if you do break above, then definitely we do have clean range to continue to the upside for around 2787 to break all-time highs. Okay, this is a minor resistance if we do break above this level, but it's minor in the sense that I'm not expecting this to hold. I expect price to just break above and go up all the way up to 2787 and make new all-time highs, or to retest this previous high right here, which is unlikely, but definitely still possible. We never know what the markets will give us, and just trying to play it as it is. So that is it for gold. So let me move on to the next pair, which is NASDAQ. All right, so NQ is stuck in a interesting place. We're ranging in between this range of around, what's this, a 9,000 tick range. Crazy. So right now where we currently are, there's not much trading opportunities, but I want to highlight to you the fact that we are expecting this bullish trend to continue for sure, following just how the markets and investors have been reacting to the Trump win. I think we're going to be seeing a break of this level. We're correcting higher, and we might break out of it, do a retest, go higher. But definitely I'm looking for NASDAQ to break and make new all-time highs. It might not be next week, but if we're trading within this range right here, there's not much for me to comment about. But I want to take your attention to, if we do break above this, we can potentially see this big upside movement, because this is just all-time highs. There's nothing on the left right here. We are breaking and making new all-time highs once we break above this level. Okay, but on the off chance that we start to creep down lower from where we are, break this support at 20385, we have clean traffic to come all the way down into 19k right here, 19.9k. So we are likely to find some support around these two levels, and we can see this bounce higher if we do come down to them like this. Okay, so this break beneath for a short, for me, is pretty much just a short-term sell idea. But once we reach these areas, definitely longs idea are on the cards. And if we do for some reason break beneath these two areas, the next one to be looking at is 19.3k for NASDAQ. Okay, long term, still bullish on the NASDAQ, as most people are on indices, but especially so on a tech-heavy index like NASDAQ, because tech companies, I think, in the next 1 or 2 years, they're going to be standing a big portion of the total market cap. All right, so that is NASDAQ. Let's look at pound yen right here. So if you look at just the JPY, the index JPY index, let me just crop this out from Pepperstone. We are seeing the rally from the yen. Yen is actually strengthening right down here. So if we carry that forward to GBPJPY, I'm expecting that rally on yen to continue, which is why I'm expecting pound yen to break beneath 190. And we have this clean traffic on the left right here to continue down around almost 400 points down into the next support on the daily around 186. Of course, like I said, we could just continue halfway through that and then show a rebound, or we could break beneath that, do a retest, continue lower. Of course, you could do that. But long term, or at least for not long term, but at least for next week, I'm expecting a break of this level to continue lower into 186. But if we do for some reason range around this area, I won't be looking for longs up into 194. Fundamentally, I think the inflation data from the UK has not been too great, so I'm definitely looking for a lower pound yen as we speak. Okay, we could continue ranging within this range for next week, but definitely I'm liking this break beneath, short down into 186. I think it's a great intra-week swing, or even intra-month swing, so I'm just waiting for that break. Once we come down to this level, then definitely I'll be eyeing how we react around these two levels. Do we see a short-term pullback? And then I'll review the latest econ data as we come into the news releases. Alright, so that is it for pound yen. Let's go to the last pair for today, which is Bitcoin on Coinbase. So Bitcoin 100k mark, barely reached it. We didn't even reach it really. We barely almost tapped it. Came really close to it. And I think what we're seeing is this move right here is an early sell-off due to profit taking by weak hands. Okay, I'm still long-term bullish on crypto as well. Not permanent bullish, but long-term bullish. And I believe that once we blast through 100k, we are going to be seeing the momentum carry us forward into maybe 102 or 103k maybe even. But definitely I'm not expecting price to just tap 101. I mean, just tap the 100k mark and then just do like a liquidity grabbing. No, I think price is gonna carry the momentum higher. It's just a bit more, before doing like a big pullback, or maybe just doing like a slight pullback and then continuing higher. I think that's what's gonna happen once we breach the 100k mark. So ideally, maybe if price for some reason decides to break 86k, this major support right down here, we definitely could see price transverse down into this range and then find some major support to be formed, the latest area of resistance broken, to see price carry itself higher into the 100k mark. I think any dips lower as of now is a great place to be looking to long. You could split your positions, whatever you want if you want to do that, but definitely looking at any dips from here to be good ideas to be buying at. Definitely not here. This is just way too high for me, but any dips lower, like this was a pretty good dip that I did not get involved in, but it was a dip that I called out in the previous outlooks that any dips is still great to buy at, even though it's quite near to all-time highs. It is still a good place to size up small on and then just get straight into hopefully push it up unto 100k, right? So that's my take on Bitcoin. All these levels are just pretty much long-term supports that I will cover when we get to them, but not right now. Okay. So yeah, I think that's pretty much it for this week's outlook. I'm waiting for the Fed funds rate. I think the consensus is pretty much still to cut rates at a slower pace. Definitely not as crazy as we expected. After the Fed actually talked about potentially just taking a steady approach. Not potentially, they are going to be taking a steady approach into rate cuts. So still expecting a rate cut, but just a bit slower and definitely not as intense as we once expected a few months ago. Alright, so yep, I hope that was insightful. I will catch you guys next week in the next outlook. Alright, peace.